S&P 500 lost a little bit of ground here again today. It was down 59 cents here on the spiders. You can see that we're back below not only the declining 50-day moving average, but also below this what has been a key level of resistance here at 129. As I said yesterday, really I view the key level more 128.5 to 129, but it is reason for concern that it's back below that 129 on a closing basis. We also saw, just a small increase in volume in here today, but it is worth noting because the volume has been so light in here recently. When we look at a 30-minute time frame, you see that we came down and tagged this trend line right here, and we can kind of draw a couple trend lines in here, and you got to say, what is the essence of the trend? Market prices don't always have to stick exactly to one particular trend line, but I think that the more relevant line is probably right around here, about 127.75 or so. But we do have this little pattern of lower highs and lower lows, which was not interrupted. It would have been nice to see the S&P 500 first of all close back above the 129 level in the 5-day moving average, but also to take out this prior level of support from yesterday where the real selling began from. So a real choppy market in here today. We've got lower highs and lower lows. This market's trying to hold on to this counter trend rally here that's established over the last several weeks. So it continues to be reason for high alert in here and for concern. Breaking this low, maybe we then come down towards 126 and a half or so. On the 1 minute time frame, you can see that the sellers were pretty much in control for most of the morning. Then right about 1:30, the buyers were able to push it back up above the daily VWAP. It looked like it was going to close strong, but sellers came in right there in the last 45 minutes, last hour of the day. It closed above the VWAP, so basically, neutral in terms of the activity that we saw intraday today. But it is a losing session on the day, and we've got it below this level, so there's still reason for concern here, reason to think that if this thing unwinds, that it could get pretty serious to the downside. So you have to be very cautious still in here. Oil did bounce in here today. We've been looking at the 30-week moving average, and you could say, well, it's kind of between the 30 and the 40-week, which is 150 days would be the 30-week, or the 200-day moving average is the 40-week moving average. On the daily time frame, we're still in a downtrend here. No damage done to that. It's only when you look at the shorter term time frames where you see a little bit of this buying emerge. We saw that over here though as well. The market got above that 5-day moving average, but then failed. For now though, when we look at a 10-minute time frame, what you want to see is, and I guess I had that drawn in earlier, is that it took out this level of resistance in here from the last day and a half, 2 days, and that then became some support. Let's look at that on a 5-minute time frame to get a little bit better handle on it. The market rallied up to that level, pulled back, and it came up on pretty heavy volume, pulled back, and then jumped above this 5-day moving average right in here. And now it's just kind of consolidating in here. I think as far as oil goes, support right around 93 right now, and it's trying to get back up above that level in here right near 95. I think that oil may need to consolidate a little bit through time in here, but this trend is still lower, so be careful about getting aggressive and trying to catch a bounce. Financials did break that $21 level that we had been discussing. So that's right here, and I thought that would pave the way for a test of 20. It looks like it's on its way there. When we look at the 30-minute time frame, here's that $21 level. Clearly the sellers are in control. We've got lower highs and lower lows, potential support down here actually at about 1975. If you recall, that was the level where we had found support prior. My opinion of this group remains unchanged, which is we've got this mix of moving averages crossing back and forth above and below each other, which represents indecision, and you're best off just staying away from the financials. The Russell 2000 continues to be the leader here on the upside. This group was up again today, up 32 cents or 0.43%. Good volume in this group too. You saw that big volume on this push higher, lighter volume yesterday, and then another push higher again today on an increase in volume from the prior day and above this 20-day moving average of volume. I look at that 20-day moving average of volume just to kind of spot unusual volume activity, not necessarily that the exact number is so important, but just is a reference point more than anything. On the 30-minute time frame, though, the key level that this market broke past and will remain important as far as the market staying above 72 and a half. I don't think we're going to see any larger sell-offs as long as that 72 and a half holds. Yesterday we're thinking that it looked like the market was due for a little bit of a pullback in here. It was holding up the best, but I thought that a pullback might be halted near the rising 5-day moving average. It came close to that. Buyers came into this market about the same time as the S&P 500, but they were a little bit more convicted in the Russell 2000. They didn't sell it off as hard, at the end of the day here, the way the S&P 500 did. So the Russell 2000 remains the strongest group, and probably where the easier upside is going to continue to be found for now. And the Nasdaq 100 was down 10 cents. I got to change the scaling. But this market, you know, here, let's take a look at the intraday action first of all. On the 1 minute time frame, you can see it kind of faltered in here. Looked like it was falling pretty good in this area. But then what we had at this point was near this 47.25 level is that's where it met up with this rising 5-day moving average right in here. So the market found some support at that 5-day moving average, got back above the daily VWAP, and I posted right around here that it would be important to hold above VWAP, and then a nice rally continued from there. The market got back up towards the 48 level that it's been probing on the upside here recently, and when we take a look at the Fibonacci again, that level is important, the 48 that is, because it's a 2/3 retracement of this move lower in here. So 1/3 takes you there, halfway, and 2/3. And the way Fibonacci theoretically goes is anything beyond a 2/3 retracement is considered a reversal. I find that a little bit too exacting. I don't think the market is that exact. But, we've got this 48 level from these lows as well. It's obviously an important level. The longer that the market holds up above here, then, the better it looks. So we've got, the NASDAQ and the, semiconductors continue to act strong. They're right up against their 200-day moving average. The S&P 500 is back below its recent important level, and the financials are breaking down. So we continue to get a lot of mixed messages from this market, and it just remains a volatile trading market.